It's the bank you don't have an account with, but it has the ability to increase or reduce the money in your pocket. It also determines what you can do with every rand that you earn. Today, the South African Reserve Bank turns 100 years old. It's a significant milestone in the life of an institution that has transcended the Union of South Africa days, the apartheid republic, and now into democratic South Africa. At its heart is a mandate to protect the value of the currency in the interest of balanced and sustainable economic growth. But increasingly, this mandate, along with the tool of inflation targeting that the bank uses to achieve it, have come in for heavy criticism, with some suggesting that they are outdated. There are also spirited debates about the wisdom of having equity in the bank owned by private shareholders. To reflect on the milestone and the current and future challenges, I'm joined now by Reserve Bank Governor Lesetja Kganyago. Thank you for joining me, Governor. As we say, the Reserve Bank opened its doors on this day in 1921, and there have been many, many milestones over the years, including the transition, the gold standard that you lived through, that was eventually dropped, and now into democratic South Africa with your mandate drawn from the Constitution. Why is this a milestone worth marking for an institution that, as I say, was born in the dark days of the Union of South Africa, but also lived through the apartheid era? Why do we mark it in democratic South Africa?
Thank you, Tula. Institutions in a democracy matter. And society creates institutions for a particular purpose. The Reserve Bank was created after the First World War, and it was also created after the banking crisis in 2018, and it lived through the years shaped by the society that it was part of, and it's been very much part of that. And the first monetary policy framework that was there was basically the gold standard. It was pegging the South African pound to gold. When the gold standard was abandoned, we became part of the Bretton Woods system of exchange rates, and the Bretton Woods system collapsed, and then entered an era where central banks were looking at monetary aggregates and the exchange rates and the growth in credit and so forth. And what became a structural change, a big structural change for central banks, came when inflation was actually eroding the earnings of working people, and that the first central bank to be at the forefront was the Reserve Bank of New Zealand, which was given an inflation targeting mandate, and said that became the eNCA of monetary policy. And that soon became the standard across the world. South Africa in 2000 was the 13th country in the world to adopt this inflation targeting framework. But the inflation targeting framework itself is an implementation framework of the mandate that is in the Constitution of the Republic of South Africa.
So let me ask
you. The good men and women who drafted the Constitution of the Republic of South Africa tasked the South African Reserve Bank with a mandate to protect the value of the currency. And that has been, in a few minutes, the evolution of the past 100 years.
How much of the old South African Reserve Bank have we retained? And specifically, I'm asking about things such as, you know, the similarity of the mandate. For instance, the mandate that we talk about now, it's comparable to the mandates that came into effect in 1990, when, you know, the aim was set back then to protect the internal and external value of the rand. It seems to me that what you've done is basically elaborate a bit more to say, you know, the value of the currency, and then you say in the interest of fair and balanced trade, but it seems the mandate is quite comparable to those days. Is that necessarily a good thing or a bad thing that we've retained, for instance, the mandate?
what came up in 1990 was an evolution, and what eventually found itself in the Constitution was in itself a refinement. Actually, what you referred to in 1990 was basically the mission of the Reserve Bank. But actually, what was in the Act in 1989 was something that sounded like a dog's breakfast. It read something like the function of the Reserve Bank is to promote price stability and balanced growth and control credit and control the allocation of credit and control the money supply growth and so forth. It was a dog's breakfast. The Reserve Bank itself in 1990 had this mission which said to protect the external value and internal value of the rand, which in itself was problematic. Because why? At that time we had two exchange rates. We had the financial rand and the commercial rand. And the financial rand was for foreigners and the commercial rand was for goods and services. So the financial rand was for capital financial flows. And when the Constitution was being written and there was a debate about what is to be of the Reserve Bank, that's when the refinement came and says that no, the mandate of the Reserve Bank should be price stability in the interest of balanced and sustainable growth. That in itself was shaped by what was going on in the evolution of central banks around the world. And that found itself in the Constitution. And I must say that as a young activist during those days, I became part of a delegation that had to go around the world. I was assigned to go to Germany and Canada to look at what the central banks were actually doing as we were refining what was to go into the Constitution. So what you have as the mandate is something that got studied, got benchmarked, and is comparable with what central banks around the world are doing.
Right. Governor, I'm on standby for, unfortunately, our conversation will be cut short by a media briefing by the DCJ, Raymond Zondo, on the work of the Commission of Inquiry. Unfortunately, I'd wanted to go on longer with you. Let me get then to this controversy around the tool that you use to pursue your mandate, one of the tools. Some would say the main tool that you use, which is inflation targeting. Are you a slave to this tool of inflation targeting to the extent of not being flexible enough to explore other options? You have your critics, the likes of economist Duma Qubule, who say you could do more as the central bank while remaining true and bearing true to this mandate of inflation targeting. But there are certainly other tools that you simply don't put to use.
Inflation targeting is not a tool. Inflation targeting is a framework to implement our mandate. The tool that we use to achieve our mandate is the repo rate. It is the policy rate. That is a tool. Inflation targeting is a framework. It's a policy framework. And give me any central bank anywhere in the world worth its salt, in the developed market or in the developing market, that does not have a focus on dealing with inflation, and I will say to you, such a central bank is not worth its salt.
Well,
I can tell you now that, yes?
I was going to say, take for instance the economist Reg Nkosi, who says, you know, he is not aware of any country that has developed the status of its economy by using interest rate policies. And there's this talk about you could, for instance, be able to engage in pumping money into the productive sectors of the economy, those kind of arguments. I'm sure you will have heard those arguments from the likes of people like Reg Nkosi and the economist Mohau Peku, for example. The purchasing of government bonds from the primary markets as opposed to the secondary market. Why are those options not foregrounded in the work that you do?
Firstly, government bond purchases are a tool that we have. a tool that we use in particular circumstances. And I think that people run ahead of themselves because they look at what the US, the ECB, the advanced economies have done, and when they had to embark on their bond purchase program that they called quantitative easing. And why was it called quantitative easing? It was called quantitative easing because the pricing of money was no longer working. That pricing of money is the interest rate. The interest rate was so close to zero, meaning that it was no longer becoming effective, and hence those countries had to use quantities to effect their mandates. Somebody tell me that the US Fed, somebody tell me that the Bank of England, that the ECB, that the People's Bank of China, that the Australian Reserve Bank, and all of these other central banks were engaged in quantitative easing when their interest rates were at 5 or 6% at the time. And the answer has got to be a resounding no. Quantitative easing is a tool that is used when you are at the zero lower bound and when you have got inflation close to zero, which is what those countries are facing. That is not the problem that we are facing. Bond purchases, we also have, and we use it, and we can only use it in particular purposes. We use bond purchasing when there is a dysfunctioning of the financial markets to get the financial markets to be working again. That is exactly what we did. And once the financial markets were functioning, we stepped aside from our bond purchase program. And should there be a dysfunction, we will be able to step in.
Governor,
tools of monetary policy are there to be used for particular purposes under particular circumstances that have got to be qualitatively and quantitatively tested before you actually embark on a tool like that.
Governor,
if you ask the South African National Defence Force to deal with inflation, they might just shoot at it and the outcome might not be what you are looking for.
Governor, we are at the mercy of this media briefing, as I said. So I do want to explore this issue around the repo rate and interest rates in a moment. But for fear of running out of time, let me jump to another theme. Let me suggest to you, Governor, that in your other functions, which have to do with, monitoring the movement of money, international movement and transactions of that nature, you've had a major moment of a lapse in the last decade or so, in that, close to 500 million rand, we are told, was moved by Gupta-linked entities. And just recently in April, you had to seize some 20 million rand, close to 20 million rand from Gupta-linked accounts in South Africa, 225 million rand linked to Mary Bushiri. But, people will rightly ask, where were you when all these monies were being moved? I can't pay someone in the UK 3,000 rand right now without questions being asked. But here we are, 500 million rand being moved by shelf companies, and we're now dealing with the consequences of that. What would you say to those who say you dropped the ball in as far as that monitoring aspect is concerned?
Definitely not dropped the ball. We monitor movements. There are so many millions of transactions that go through. The banks will say to us, this transaction is suspicious. If they tell us a transaction is suspicious, then we would actually look at it. May I just say, as you are rushing to that press conference, that we are actually assisting the Commission to track down the money. And we are able to see what those flows are. When you're dealing with fraudsters, you must know that they most of the time are ahead of you. And that is why you have law enforcement authorities. And we are faced with exactly similar situations. But I can tell you now that if our systems were not functioning, some of those monies would not have been able to be frozen, and some of the things that the Commission is able to now pen down and ventilate would not have been possible without the assistance of the Reserve Bank.
Governor, unfortunately, I'm completely out of time. I'm going to make arrangements because there were so many other themes that I wanted to tease out with you. But as I say, we now have to rush to this press briefing. A quick answer. Where's our money, Governor, from the Heritage Fund, the spiritual white boy? Where's our money, Governor? We need it for development.
If anybody is able to hide quadrillion, they are quite something. You can't find that money on the balance sheet of the Reserve Bank. The BIS that come out to say such money does not exist. Very simply, if it sounds too good to be true, it is probably too good to be true. And if anybody has got quadrillions of dollars, why would they be operating from a Gmail account that they can't even afford their own domain account?
Right. Governor, thank you for clarifying that. I mean, I think the point has been well made. It was more tongue-in-cheek on my side. That is the governor of the central bank, the South African Reserve Bank, Lesetja Kganyago. It's a pity, really, because there were so many other themes to explore. The whole debate about nationalization, private shareholding of the Reserve Bank, we didn't get to do that, as well as the interventions that we saw the bank do last year, 300 basis points, I think it was, that they reduced interest rates by to try and counter the situation. We'll have to set it up again and go back to that conversation.